Hey guys, welcome to another video. In this video, I'm going to show you the very simple and easy strategy that can be used by scalpers, swing traders, and even day traders. But before we start, please click the like button, subscribe, and turn on the notification bell to get notified whenever we upload a new video. Now let's get started. For this strategy, we are going to use Heikin Ashi and two indicators. Firstly, change the candle to Heikin Ashi. Click on this tab and select it. Now the first indicator is parabolic SAR, so click on this indicator's tab and type parabolic SAR. We are going to use this one. The second indicator is MACD, just type MACD. This one is the right one. Now let's change the setting of the MACD. Just go to the style and change the color of the MACD line to yellow and increase the thickness so that it will be more visible. Again, change the color of the signal line to white and increase the thickness as well. You are going to change the setting of the parabolic SAR to white and also increase the thickness to make it more visible, and finally, change this parabolic crosses to line. Now we are done with the settings, let's discuss the strategy. The main idea of this strategy is that when the parabolic line is above the Heikin Ashi, it shows that the price is in a downtrend, and when it is below the Heikin Ashi and is sloped upwards, then it shows an uptrend. And when the MACD line crosses below the signal line to the downside and below the zero line of the MACD, you will take a short trade. And when the MACD line crosses above the signal line to the upside direction and above the zero line of the MACD line, you will take a long trade. For example, here you can see that the price is in an uptrend, and the parabolic SAR is also below the price and is sloped upwards. Then you will wait for the MACD line to cross above the signal line to the upside direction, which you got at this point. Then you will enter a long trade at the close of this candle. You will set your stop loss below the parabolic SAR and set your profit target according to your risk to reward ratio. So this strategy uses the parabolic SAR to determine the direction of the price and the MACD line crossover to determine your entry point. Here is another example. You can see that the parabolic SAR was trading below the price before it passed over the price and started trading above the price, giving you a clear downtrend. Notice that the MACD line also crossed below the signal line to the downside, and the MACD histogram started to increase as well. Then you will take a short trade. You will set your stop loss above the parabolic SAR and set your profit target according to your risk to reward ratio. You can also see that when the price reached this point, the parabolic SAR started trading below the price and the price reversed. When the MACD line crosses above the signal line, you will take a long trade and set your stop loss at the low of the previous candles and set your profit target according to your risk to reward ratio. Here is another example of the kind of trade you are not supposed to take or should avoid entering. Here the price is trading sideways, the parabolic SAR is moving zigzag horizontally, and the signal from the MACD is not accurate as the MACD line crosses above and below the signal line frequently. Sometimes this indicator gives a false signal or even a late entry into the market, which is why you have to combine it with price action, because indicators are not magic and you shouldn't rely only on them for trade entries. Please click the like button, subscribe, and turn on the notification bell to get notified whenever we upload a new video. Thanks for watching.